Good morning, everyone, and welcome to the webinar this morning on using leading indicators for trading out-of-the-money binaries. Now, before we get started, I do want everyone to take a moment to read the disclaimer. The most important thing is do not trade with money you cannot afford to lose. This presentation is neither a solicitation nor an offer to buy or sell futures, binary options, or forex. So I'm going to pause just a moment so y'all can read the screen real quick, okay? Okay, let's get started. Now, my name is Gail Mercer, and I'm going to be hosting the webinar this morning. And first, I would like to thank you for coming out and attending the webinar this morning. Now, I want to tell you a little bit about myself. I've got about 15 years of trading experience. I actually started out with a company that programmed indicators, and I became enticed by the price bars. I actually fell in love with them. I specialize in price action, volume analysis, and divergence, simply because they are leading indicators. I'm also a frequent contributor to Stocks and Commodities Magazine, Traders World, and Top Shelf. I have also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. My latest book is Nadex, Trading Nadex Binary Options, Keeping It Simple Strategies. You can find that either on my website or on Amazon. Now, the indicator that I'm going to be teaching you how to use today is a stochastics, and it typically identifies when markets are either overbought or oversold. Anything that is above 80 would be considered overbought. Anything that is below the 20 line is considered to be oversold. The stochastics actually measures the quality of the highs and lows. In other words, does it have enough torque to continue up, or is it going to fail? It is a directional indicator. That means it's very easy to read volume divergence. Higher highs in price should equal higher highs in your stochastics. If you are seeing lower lows in price, you should expect lower lows in the stochastics. If you are seeing lower highs in price, you should see lower highs in the stochastics. If you are seeing higher lows in price, you should anticipate higher lows in the stochastics as well. Now, that sounds easy enough, but once we put it on a chart, it's going to get slightly more complicated. Now, divergence is simply when price in the oscillator, which in this case is the stochastics, is going in opposite directions. With a directional indicator, whatever you see price doing, the oscillator should match it. If it doesn't, then you will have divergence. That means if you are seeing higher highs in price but lower highs in the oscillator, you have divergence. If you are seeing lower highs in price but higher highs in the oscillator, it is divergence. If you are seeing lower low in price and higher lows in the oscillator, you have divergence. If you have higher lows in price but lower lows on the stochastics, you have divergence. Now, each one of these is a different type of divergence, but I'm not going to actually go into the type of divergence as much as you just need to know that there is divergence. It's telling you that price will go in the opposite direction. For example, here on the gold chart, you see that we were making higher highs we were making higher highs in price. And I'm going to actually put the pin on so you can see we're making higher highs in price and in the stochastics. Then we make a higher high in price, but we make a lower high in the stochastics. This was your divergence. Over here you can see that we have made equal highs from this one to this one, but the stochastics made a higher high. That is divergence. Okay? Now let's go to the next slide. Here you can see we're making lower lows, lower lows. Stochastics is confirming it. On the final low, right at the bottom of the chart, here, look at your stochastics. That, at the close of this bar, that told you price was going to go up more likely than not. Then we come back to make a low here. It tries to test the low over here, and look at what the stochastics does. Look at what price does. Price makes a higher low, but the stochastics makes a lower low. That is divergence. Again, we have the same scenario here. We make a low, then we make a higher low, but yet the stochastics makes a lower low. Again, this is divergence, and it tells us that more than likely, because the divergence is on the lows, more likely than not, price is going to go up. And that's exactly what it does. Now, what I like to do is combine the stochastics with the power of pivot bars. Now, a doji, if it is at a high or it is at a low, it is a pivot bar. Otherwise, you typically will take 3 bars to complete a pivot. In this case, the middle bar makes a high. The next bar closes beneath the low of the pivot bar. This tells us that price should go down. In this scenario, the middle bar is a low. The next bar closes above the high of the middle bar. This tells us that price should go up. Then we have what we consider a 2-bar pivot. In other words, the second bar, which formed a low in this case, closes above the high of the previous bar. This is considered a bullish bar, and the next bar should also be an up bar. For the market to go down, what you would want to see is a bearish bar that engulfs the previous bar, and that's exactly what this bar does. It exceeds both the high and the low of the previous bar. This is considered a very strong bearish candlestick. The next bar should be down. Now we also have what is called ghost pivots. The only difference with a ghost pivot is the close of the third bar. The second bar, I always number my bars, it's 1, 2, 3. The second bar forms the high. The third bar does not exceed either the high or the low of the middle bar. And in this case, this tells us more than likely price is going to go down on the next bar. On the low, you can see that we have bar 1, bar 2, bar 3. Bar 2 forms the low, and bar number 3 does not exceed either the high or the low of bar number 2, which forms your low. Now we can also use this price pattern, and again, this is a 2-bar, and this is a bullish candlestick that forms a low but closes at the very top. The next bar should be an up bar, more likely than not. On the last set, you see that the high is formed, but then the bar closes on the very low. This, again, it is a bearish candlestick, and this tells us that the market should go down. Now, I like to use leading indicators with out-of-the-money binary options. And the reason that I do is because you can lower your risk. So to understand what an out-of-the-money binary option is, let's just review really quickly what the different terms are. If you are in the money and you're selling, that means the strike level above the underlying price is above where price is currently trading. So for example, if I wanted to sell an in-the-money binary on this chart, it would be 101.42 because price is trading at 101.38. The 101.38 is your at-the-money strike. Now your out-of-the-money strike when selling will be below the at-the-money. So that could be 101.34, it could be 101.30. Both would be out-of-the-money binary options. If your buying is actually the opposite, your at-the-money is still where price is currently trading. Your out-of-the-money will be above where the at-the-money is, so you would have 101.42, 101.46. Both of these would be out of the money. Your in-the-money binaries would be below price. That would be 101.30, 101.34. Now, the other thing that I like to explain to everybody is the strike width. On a 2-hour binary option, it is 4 pips on the USD JPY. Okay? Now this is a chart from a study that I did on the indices and the commodities and the forex markets. And I can actually refer to this and tell you on any given day, at any given hour, can the USD JPY move at least 4 pips? Typically, yes, it will. The only time that you will get maybe into some trouble on that 4-pip move is during the summer when all of the markets start to slow down. Now, this is an average that is computed using a 10-year period, okay? It's a 38-page report that I did. If you want to send me an email, I'll be happy to send it to you. But this is important when you're trading out-of-the-money binary options. Because if you're trying to do an out-of-the-money binary option, and let's say you're trying to go 20 pips out, if you look at this chart, you can see that there's times that it's not going to move 20 pips. You know, if you're wanting it to, if you want to exit early on your binary option, then normally what I do is say, okay, I want it to move 4 times the strike width in my favor. So if you have a strike width that is 4 pips, 4 times 4 is 16, so I want price to be able to move 16 pips. Again, most of the time the USD JPY can do that, but there are exceptions. For example, from April until the end of September, I wouldn't want to count on that because you do not have enough movement during certain time periods for price to move in your direction. The general guidelines that I use for a 2-hour binary, I go in with 1 hour remaining. That means at the top of every hour, I'm usually going in a binary option. My goal is to have price move in my direction at least a minimum of 2 strikes. So if I'm out 1 strike and I want 2 strikes in my favor, that means it has to move a total minimum of 12 pips. Okay? Now, in this case, if price moves in my direction, time decay is actually working in my favor because price is moving in my direction. Okay? Now, before we look at some charts, I want to give you my contact information. It's tradershelpdesk.com is my website. We do have a blog. It's blog.tradershelpdesk.com. I have a ton of videos on binary options on my site. You can also contact me by email at gm@tradershelpdesk.com, or you can call me on my cell phone at 336-263-0122. Now let's go look at some examples. And what I want to do first, if you are new to trading binary options, I suggest that you go to the Nadex site, go to markets, and for example on the stock indices, we're actually going to be looking at some 20-minute binaries. So I want to see, okay, how big are the strike widths on a 20-minute binary. Now, if I come down to, let's say, the Wall Street 30, okay, you can see that the strike width is 6 points, other than lunchtime, which is from about 11:40 to 3, it goes down to 4 points, okay? On the U.S. 500, typically it's, 3/4 of a point. During lunchtime, it goes down to 1/2 a point. On the U.S. Tech 100, the strike width is 2 points. During lunchtime, it goes down to 1 point. So let's go and see if we can find any binary options that are either overbought or oversold. So I use TradeStation, and I do for a reason, because of this scanner window here. And you can see on the 20-minute, it's telling us that this is overextended at the moment, okay? So you could start looking for a binary option. So let's go and look at some 20 minutes. And this is on the NASDAQ. And I'll show you what I mean about strike width as well. Okay, from this strike to this strike is 2 points at the moment. Now this is going to expire in 21 minutes. It hasn't started yet, so we have to wait for it to start. So let's go back over here. Now these are 20-minute binaries, so when I saw 21, I knew it had not started yet. We have about 40 seconds. So I want to start analyzing my chart while I'm waiting for it. Now this has tried to test this low, has not been able to. So it needs to break this little plus sign here. And I'm going to make this easier for everyone in the room. I don't want to get too complicated on everybody. Okay. We have about 1 second before it starts. Now they've started. What I would like to see is that this comes up to this congestion dot here. Do you see how the stochastics is overextended right now? So what I would like to see is that this comes up to this white dot then it pulls back, then I could potentially have an entry. Right now, just not an entry there. This one more than likely is going to come down because that stochastics is way overextended. So I'm going to shrink this down some. We're going to go over to the Dow. Now, before I go into a trade, I like to make sure that y'all understand this is for educational purposes only. You should not trade with money you cannot afford to lose. In other words, the disclaimer that you read earlier pertains to now as well. So I'm going to wait a minute because I want price to get as close to this as possible. It may even form a congestion dot, and that is fine with me. If it does, I can get it when it hits the congestion dot. Now, my stochastics is slightly different from this one. If you're looking at the strike width on the Dow, you can see every 4 points you have a new strike. Now, the one thing that you do need to watch when you're doing this is your expiration. Remember, this is a 20-minute binary. And I'm doing 20-minute because I do not want to get into a very long trade in the webinar. And this is the at the money right now. If you wanted to go in at the money, this is where it is. Okay? And I'm not recommending this as a trade recommendation or anything. I'm showing you the way that I use the stochastics. Okay? That's what makes it educational, guys. And this takes patience. If you don't have patience, you will develop patience. This is your at the money. I want the 874. Okay, but I want some kind of factors there that says, hey, this is probably going to go down. Now this is a 15-minute. I'm going to go down to a 5-minute. When I go down to a 5-minute, it doesn't change your strikes. It just changes the time frame that you're looking at. And this is what I'm weighing, okay? How much do I want to risk on this trade? Now these 20-minute binaries, they do tend to fluctuate quite often. I'm going to do out of the money for demonstration purposes only, okay? And I'm just going to do one contract, and I'm going to have, well, it went up to 70. Maybe I can get it cheaper. I'm going to do it at 70, okay? So that's a total risk on that trade of about $30. If I lose, I'm only going to lose 30. Does everybody understand that? Now, I'll answer some questions while we're sitting here watching this. Let's see. Why stochastics versus the RSI or MACD? I just like the stochastics better, Chuck. That's really, it's, you know, trading is more about what you can relate to. I can relate to the stochastics, so that's what I use. I do not do any 5-minute trades. They are too fast for me. That goes into trading personality. to me, it takes me a little bit longer to actually read what's on my chart than, you know, a 1 and a 5. So the white dot is what I call a congestion dot. It's built into my indicators, and it just tells me that that is an area that may resist price. Okay. It works on any time frame. I've used it on dailies. I've used it on 240s, 180s, 60 minutes. You know, to me, there's nothing magical about your time frame. What's magical is your discipline and your money management and your trade management. My contact information, sure. If you go to my website, which is Traders Help Desk, you can get to me or to the blog, either one. You can actually click on the blog, or you can click on the contact tab. They're all right up at the top. My email address is, let me find that screen again. My email address is gm@tradershelpdesk.com. And you also have my phone number there. That is my cell phone number, and I typically do answer my cell phone unless I'm in a trade, and then you'll go to voicemail. So I would normally wait for the indicator to drop below before making your trade correct. Typically, no, I don't wait. I actually anticipate. You would have to go to my website. I designed the indicators for TradeStation multi-charts in NinjaTrader only. Yeah, but sometimes it'll take a while for it to come down. Yeah, we have 12 minutes. I mean, a lot can happen in 12 minutes. And this is where you really have to look at it and say, okay, how much does price have to move? You know, and currently it's less than 10 points. What do I use as a trigger to enter a trade, Leonard? I have other indicators that I use in combination with the ones that you see on my screen. But if this forms a reversal bar, and this is, you know, trade management more than your entry, okay? If this bar that is currently forming right here should form a reversal to the downside, okay? And it should close on the low. That would be your reversal bar. Then the next bar should be low. Does everybody understand that? That's just price bars. What's my favorite time frame for trading binaries? I like the 20 minutes and I like the 2 hours. We still have 2 5-minute bars in this market. Not necessarily. So right now, price is making lower highs and your stochastics is making higher highs. Should it do that? Rick, send me a snapshot. Let's see. Mine is just smoother, okay? Do you see the same pattern there, Luca? You know, mine's smoother and it actually gives you the dots to show you, okay, this is where I need to start reading this divergence, okay? But it will still work with the stochastics that's built into Nadex. Do you see that, Luca? Should you always wait for overbought or oversold to look for divergence? I would say no, because there are times, and actually this is a great example on the chart because I was actually long earlier this morning from divergence, and it wasn't overbought or oversold. This was your last low here to this low, okay? And do you see how it went from this low to this low? This is a 5-minute. Actually, that ended up being hidden divergence on a 15-minute chart because I was long on that one. And let's see. Let's pull up a forex. Let's see if I have anything that's pivot high on the Aussie. That doesn't have the divergence on it. That high was 72.71. No, it went higher. But you still had it there. So you went from here to here. You went from here to here. It's not overbought or oversold, but those are still good entries. The euro had a beautiful one this morning, and I'll show it to you. From here to here, and look at price. And this is the one that we call hidden divergence, and that generated that downtrend. You don't have to have overbought or oversold. It depends on really how good you are at practicing the divergence and trading it. I tend to trade it all day long. So anytime you spot divergence, a change is coming. Yeah, because what you're going to do, you're either going to have the trend change directions, Dave, or you're going to have a continuation trade. If it's trending markets and you get hidden divergence on the lows in an uptrend, then you're going to have more upward movement, okay? If you're in a downtrend and you're getting divergence on the highs, you're going to get more downward movement, okay? I mean, that's what divergence is telling us. Now, see, right now, you have $30 of risk on this trade, right? If we thought, well, it's not going to be able to get here, you could actually exit the trade with a minimum loss. Do y'all understand that? And not every trade is going to work in your direction. You know, it just can't work that way. That's not trading, and it's not realistic. Okay? This is giving me a trade that says, hey, I don't have to risk an arm and a leg on this trade, okay? But if it goes in my direction, then I will turn a profit, okay? But there's always that risk of loss. Yeah, you have to let the losses roll off your back, really. You have to do the same thing day in, day out. No difference. And it takes a long time. What I see with most traders is you design a plan and then you don't have money, let's say within 30 days, so you discard that plan, okay, and you start building a new one, okay? Yeah, I do trade during news. With Nadex, I do. And that was something totally new to me, Jim, because on the future side, on the forex side, I would never trade during news announcements. Not ever, never, don't even think about it, okay? But with Nadex, because I can cap that risk, I just go ahead and trade. And, you know, I do very low-risk trades for the market reports. It doesn't bother me at all because I know, you know in advance what your risk is. You can't lose more than that. And I mean, new traders really don't know what they don't know, okay? They don't know you can get into a Dow trade and lose $1,000 at the snap of your finger, okay? They'll learn, okay? But it's, what you don't know that you don't know. Oh, yeah, just like I showed you, just a few minutes ago, we could have closed this with, what, a $10 loss? So you could take a $30 loss, decrease it to 10, But to do that, you have to manage your trade. You have to keep looking and saying, okay, do I still think this is going to work in my favor? That was, well, I know it was 3 minutes ago because there was 3.5 minutes left on the binary. Okay? Yeah, that's exactly right, David. It's a job. It's not a game of chance, Let's go do another one. I got time. We'll do one more. If there's a setup. I'm sorry. I got to check and see if there's a setup. Okay, we got the NASDAQ is now overbought. Okay? That's going to be a tight one because it's 49.51 down to 49.46. But this is an example only. It is not a trade recommendation. This is for educational purposes only. I have to remind myself to say that. Let's see here. Let's just pull up a chart. And this may not be a great example here, but we're going to do the example anyway, because I want y'all to learn. Well, that was weird. Okay, let's see if we can get this back up. For some reason, it's not cooperating with me. Can everyone still hear me? Okay. Sometimes it's my internet. I live in the country, so. Okay, let's see if we can do this again. Okay, so I'll do this one. Now this would be considered more, you know, at the money. I'm going to see if I can get into it with just one contract. Again, this is for demonstration purposes only. There's other factors to consider. I don't know your risk limit. Now, anytime I do the 20-minute binaries, I generally do go ahead and set a profit target because they move very quickly. In this case, we're short, so I'm just going to set a $5 profit target. You see that reversal bar formation here? In this case, it took the third bar. This is your high. It took this bar to really create movement. This was your inside bar. This is not a true pivot. It's a ghost pivot. It's actually a good example of it, too. Now, it should come down to this 20 line on the stochastics. It looks like it will come down to 49.45 with the indicators. So I'm just going to draw a line. And this is where we're expecting it to come. And I'm going to change the color to red. This is where we think it will come because that's where this little ATR is. Okay? We'll see if it gets there. Yeah, they are pivot candles. You know, the other thing you can do, this has 15 minutes. You could even come down to 49, 48.5. That's your other in the money. This was more at the money. Or you could go up 49.50.5. That would be your in the money. You know, you've got so many different opportunities with Nadex binary options that it will simply blow your mind. And that's what I love about Nadex. I can take one trade setup and I can create 6 or 7 different trades if I want to in the market's moving. You know, there's a lot of it depends on what your risk tolerance is. How good are you at reading the chart? How much do you understand about technical analysis? But, you know, you get a really strong moving market like the Euro US dollar was this morning. I mean, I created easily 2 trades off of that. 6 a.m., a 7 a.m. I could go on out to an 8 a.m. Then I could do multiple strikes on top of that. There's just all kinds of things you can do once you really learn to trade. And a lot of it is actually reading the charts. Now, for example, do you see how this bar is forming right here? I don't like that bar. I can already tell you I do not like that bar. Okay? If that continues, I would exit early. Okay? Nadex is fantastic. Now, and this is literally what I do when I'm trading. From this low to this low, from this low to this low, should not be doing that, okay? So we need to see a new low, and we need to see it pretty quick, because I would not want that to throw a divergence right there with me in the middle of my trade. Do y'all understand that? In other words, this bar needs to continue down. It does not need to give me grief. Now this is trade management, okay? And we are really kind of slow because it's a holiday week. People are still on vacation. Let me check something. I want to see what the volume is doing. Nope, I'm out of that trade, guys. Okay, and all I have to do is click and just go ahead and amend the order because I don't like that bar. Yeah, it is, Stefan. And you could see that buyers were coming in off of that bar as well. So, nah, I won't stick with a trade if it's not going to go in my direction. Especially that one, because this was, you know, a $50 trade. I'm not doing a $50 loss here. I'm going to manage it, okay? That's when it's overbought or oversold. I've got an indicator that tells me in this radar screen, Mike, if it's oversold. But I also have another indicator that tells me when the market's at a pivot high or a pivot low. So literally, I'm just kind of scanning all day long to see which ones I actually want to do. Extra volatility, no. Actually, it slows down. Statistically, the data shows that the market slows down. Does it move more? Sometimes. Now, I'm going to go ahead and wrap it up. Does anybody have any questions this morning? Yeah, it is the correct setting, Rick. Actually, Rick, wait a minute, Rick, let me show you. I'll just look real quick. It seems like it was 3. No, it's 3. That's what I thought it was, Rick. Did you have a question about pivot candles? What do you mean the pivot chart, David? I'm sorry. The you have to email me for that. I do have cheat sheets if anybody wants to email me. My clients wanted me to design cheat sheets, and basically it is that. So if you just email me, I'll be happy to send you the cheat sheets. I suggest if you don't know them, you print them up and put them by your computer. The best reference for learning the Nadex platform, I did a video on how to use Nadex binary options. And if you go to binaryoptions.nadex, let me see if I can find it. You can do actually a lot with the Nadex platform. Let me see. See, there's two here on customizing and tips and tricks, and then how to use the Nadex binary options is on page 2. And it's about a 20-minute binary, but I show you how to draw the lines, add the indicators, change your time frames, save the layout. You know, there's a lot you can actually do with Nadex. I don't think it's a matter of posting a position first. You know, Nadex has a lot of liquidity, and so I don't think that's really an issue. Are overseas trading platforms bad news? Are you talking about for binary options? I wouldn't touch them with a 10-foot pole. Yeah, I'm trying to refrain from saying anything too bad, but I would not touch them. Let's see. Also, if I've done other presentations with Nadex, and in January my presentations are really going to be focused on trading psychology, because I think everybody needs reinforcement, especially at the first of the year. So what I suggest that you do is go to nadex.com, go to Learning Centers, and go to the webinar archive. If you missed one of my other presentations, then you can find it here as well. I did one on pivot bars already. It's pivoting into trading opportunities with binary options. They have that recorded and posted for your convenience. Yeah, the cheat sheet is just basically these where you can print them and put them by your computer, because if you don't know these price bars, you're behind. Okay, you need to jump to the front of the class here. And that's just my personal opinion, because, you know, the price bars, that's what we're trading. We need to know them. We need to understand them. It's like, you know, if I go out and buy a set of knives, but I don't know what the knives do for me, they're kind of worthless, you know. And above all, I'm going to pay attention to the price bar. Everything else is secondary. Okay, any other questions? I do appreciate all of you joining me this morning. I do look forward to having you in the webinars in January. Really going to be focused on getting our head straight to trade, okay? And that's a really big part of trading. Oh, well, thank you, David. All right, everybody have a wonderful, wonderful new year, and I hope to see you in January.